So is there reason for muni investors to still worry? Let's ask Tom Kozlik. He's head of muni strategies and credit at Hilltop Securities. Tom, it's good to have you here. Welcome.
Thanks for having me back, Kelly. I appreciate it.
I think you need to explain to people just how interconnected munis are between kind of state and local government funding and the banking system. I mean, this isn't just, hey, by the way, on the side, this is happening. This is actually, unfortunately, a pretty important occurrence here.
Yeah, and in the conversations that I've been having with investors this week, one of the main things that I'm doing is recognizing and acknowledging how stunned and really disoriented a lot of the municipal investors are who I've been talking to. I'm explaining to them that we need to be realistic, that we don't necessarily know everything that's going to be playing out over the next couple of weeks or couple of months, that we don't know if what happened last week and over the weekend is going to snowball. I'm not seeing cracks in muni credit quality. But as you described, there is a really strong, an underappreciated interconnectedness with large, medium, and especially some of those small banks and public finance. And right now, we're talking to investors about being cautious, a little defensive, but we also don't want them to miss any opportunities.
Yeah. Talk to me about kind of 2008 or past periods of credit strain. What's happened with munis?
So we saw, now this is close to a worst case scenario that we saw in my mind playing out through the summer into the fall and the winter of 07 going into 2008. And it was oftentimes in that period of time, there was a lot of, it was difficult for liquidity, for issuers to get liquidity during that time. From an investor perspective, MT or municipal to treasury ratios, especially after Lehman Brothers, they really widened out, and that there was some opportunity there. And that's one of the reasons why we're asking investors to stay defensive. For months, I've been talking to investors about using this opportunity to trade out of credits that might be a little more problematic and into credits that are stronger. Now I'm doubling down on that, but also asking folks to be a little more defensive, to really stay in highly rated GOs and revenue bonds.
Sure. No, and it's a great point that if you're on the sidelines, you start to see these yields spike at all. Maybe there's an opportunity depending on the credit quality. Let me, Tom, with the last question that I have for you, at least today, because I think that we'll be talking about this for quite some time. What is the risk here as it goes back to issuers? In other words, what starts as this kind of wacky, almost esoteric thing at Silicon Valley Bank or maybe at First Republic, as the banking system kind of gets a little bit unsteady, let's say, how does that reverberate back to the ability of a lot of, governments, projects, whatever that is, to finance themselves, ironically, at a time when we're doing this massive infrastructure support?
Yeah, that the unsteadiness that you're describing, the way that that plays out for issuers is if they don't have access to the liquidity, whether it be in letters of credit or other types of liquidity from banks, then it's difficult for them to conduct their day-to-day business. Now, I'm not seeing that quite yet, but that's one of the things that I'm remembering, again, very clearly that happened at the end of 07 and into, if not all of 08. So if things snowball from here, that liquidity could, I don't want to say completely dry up, but be more difficult, especially for the smaller and medium-sized issuers to attain.
And when we see that munis are available but not accepted through the Fed's new program, is that because they can't accept them? Do you think that's what drove some banks to the discount window where munis can still be accepted?
I think that one of the things that we haven't been seeing this week. Well, we've been seeing two things. The first thing is that there has been, as part of this flight to quality that we saw in the beginning of the week, we did see a lot of buyers, not necessarily banks, but buyers on the institutional and the retail side. They were, even in some cases, putting some cash to work in munis. They, instead of having their money in cash, were choosing to look at municipal bonds. And I think that one of the reasons for that is just because of the strong credit quality and because they were seeing that as an opportunity. I think that there are going to be times over the next couple of months, if not next couple of weeks, where that's going to continue.